You know, a year ago we said that we're going to have the opportunity of a lifetime also short selling treasury bonds. You know, we have some clients that are billionaires and they made a lot of money in 1978, 79 when we said short the treasury bonds. At that point, I said T-bonds will go down 40 to 50%. Wall Street chief economist for Goldman Sachs said that's absurd, but it happened. They declined 44%. This time I think by the time it's all done, treasury bonds will be down maybe 60 to 70% from the top. Do you know that they're already down 48%? China was for about 20 years. They said it's the locomotive of the global economy.
And it was.
Okay. That locomotive has now stalled out.
Yep.
It's standing still. The locomotive, in fact, I think they're going in reverse.
Right.
Okay. So you can make a lot of money if you know. But most people think that knowledge comes from the thin air, from the heaven. It doesn't. It comes from books. You read and you study and you inform yourself of what is real, what is not real. And programs like yours, the guests that you have on, and, you know, I listen to some of them and I know them, and you don't hear them on TV, financial TV.
No.
You never do. So in financial TV, it's mostly money managers. We don't manage money. Money managers have a conflict of interest. Right now, they have, the smart ones, they would love to say, sell, get the hell out of the market, but they can't because they will have to close up their business. You know, we have a program, in fact, called Hedge Folios, where we don't manage it. We manage the 5 portfolios, model portfolios of ETFs. And we do the timing. Basically, we said, okay, here's the model change. People get an email and so on, and then they can change. Now, for this year alone, the top performing of these 5 portfolios is up 18%, okay, for this year. The NASDAQ is down 30%. So we have an outperformance of 48 percentage points. That's the kind of performance that the hedge funds will kill for, you know?
Right.
Yeah, but it's so easy because you can follow the changes. You get an email saying that we made changes. Take a look. If you can replicate them if you want to do that. But that is the best way to do it because it's not possible on one program like this to tell all the different people of different abilities and so on what to do. You know, one thing I have to say is you want to be safe with your money. Want to be safe with your money. And T-bills, the 90-day treasury bill from the government, that is the safest asset. It was yielding less than 1% here earlier this year. Now it's yielding 4.3%. And if I'm right, then it's going to be yielding 15% pretty soon. And you don't see them declining in price. The bond market managers now that you see on TV, they say, buy bonds, buy bonds. Yes, you know why? Because the bond market has gone totally illiquid. They want to sell their bonds in their portfolios. They need to create buyers. And that's why they go on TV and say, buy bonds. You know, we don't do that. We have no conflict of interest.
Right.
We can tell the truth. Can you believe it? A T-bill is very short term. Most of the T-bills are 90 days. So every 90 days they roll over. So that means that they cannot really decline in price substantially. The Treasury bond will come due in 20 years or 30 years, and they can lose, as I said before, about 46 or 48% already. Now, we never used to really care about the politics. You know, never. No. So let the politicians in Washington do what they want to. The markets will do what they want to, you know. But that has changed, you know. So now you have to know what these people are doing. I mean, here, our energy policy, we're going around the world begging OPEC, begging everybody to give us oil. And right underneath our feet in the United States is 400 years of proven reserves of oil. Proven reserves, not guesses. So why aren't we drilling it? I mean, this is... If you would put this in a novel, they would say, well, that could never happen. It's human nature. For example, before we were talking about options, do you know that in October, we saw the biggest call buying option binge in the history of the United States? Everybody was buying call options on the stock market. When everybody is doing something, you want to do exactly the opposite. If you want to make money, you're betting on the market to go down.
Right.
But everybody wants call options because, the market is going to boom. The Fed is going to pivot. And, the economy, we're going to have a soft landing. Soft landing. Grimm's fairy tales is the closest thing you get to a soft landing. It never happens. The numbers confirm that. These are not guesses. The numbers confirm it. We have never had so much debt. When you consider the debt of the United States is $30 trillion. Trillion. We never used to think about trillion because it's too big of a number to think about, And they're leveraged, something that we never knew. They don't announce this. Leveraged pension plans. I don't believe this, because most investors should never even go on margin. They should not use leverage for their stock market investments. Leverage is the thing that kicks you out of good investments. There are always bear raids. These are manipulated. The market is totally manipulated now,
Yes.
And so they have these bear raids. And so it's designed to get you out. If you're on margin, the brokerage firm will send you a note. Within 24 hours, we need $20,000, So the broker will give you the best sell signal, and that is a margin call. If you got a margin call and never made it, just sell.
Wow.
That's the best advice you'll ever get from your broker. When you get a margin call, it means you have to put up more money, and it can even get worse. We had a meeting. This was after the 1987 stock market crash. We had lunch. The big Wall Street guy from a big Wall Street firm came. He wanted our business. And said, what are you doing as a vice president traveling around the country? Because he told us he was very busy traveling to all these different cities. And I said, well, it's housing. I said, I didn't know you were in housing, but I thought you were in the stock business. He said, well, I'm in charge of the foreclosing on houses. He was foreclosing on the houses of people who have margin calls and couldn't meet it. So most people don't even know that. They open a margin call, they don't know that they can lose their house.